Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at USA rare earth.
If you find our talks useful, please consider subscribe, like, and comment underneath. It really helps us get this information out to more people trying to navigate these markets.
You know, usually when we talk about commodities or mining on this show, people's eyes tend to glaze over a little bit.
Guilty.
Right. They picture rocks, heavy machinery, and, very slow-moving charts. But today is different. We're looking at a company that sits right at the intersection of high-tech innovation, national security, and arguably one of the most aggressive supply chain shifts of the last 50 years.
That is a big buildup. But looking at the research, it feels justified. We're not just talking about digging holes in the ground here.
Well,
We're talking about the stuff that makes the modern world work: electric vehicles, fighter jets, wind turbines, and the fact that the supply chain for all of that is currently, let's just call it fragile.
fragile is a polite way of putting it. We're talking about critical minerals. And this company, USA Rare Earth, is trying to solve a very specific, very massive problem.
Which is?
The United States' near total dependence on foreign powers for the magnets that power our future.
Okay, so let's kick this off with the elevator pitch. If I'm looking at USA Rare Earth, what exactly am I looking at? Because on the surface, they look like a mining company.
They do.
They have a deposit in Texas, they have trucks, but they seem to really hate being called just a miner.
That's the first thing you have to understand. If you value them as a traditional mining company based on, how much dirt they move, you're going to miss the entire investment thesis.
Okay.
They define themselves as an emerging growth company, but the real key phrase here, the one you need to circle, is mine to magnet.
Mine to magnet. It sounds good on a bumper sticker, but let's unpack what that actually means operationally. Because usually those are two very different businesses.
They are. And that's the disruption. In the traditional model, a miner digs up the ore. They might process it a little into a concentrate, but then they sell it.
And usually they sell it to a processor in China.
Exactly. That processor turns it into oxides, then metals, then alloys, and finally someone else turns it into a magnet. The miner captures just the smallest sliver of the value in that chain.
Right, they're just the raw material provider. They don't get the premium for the finished tech.
Exactly. USA Rare Earth is saying we are not doing that. They're building a vertically integrated supply chain.
The whole thing.
The whole thing. They want to dig the ore in Texas, process it themselves, turn it into metals, and manufacture the permanent magnets themselves. They want to hand a finished product to an EV manufacturer like Tesla or Ford, or a defense contractor like Lockheed Martin.
Which is just, that's incredibly ambitious. Basically, they want to be the entire supply chain in one company.
It is ambitious, but it's also necessary. And that brings us to their primary competitive moat: independence. The entire point of this company is to create a supply chain that does not touch China.
And the foundation for that is this Round Top deposit in Texas.
That's the one.
I saw Round Top mentioned about 100 times in the notes. I know it's in Texas, but what makes this specific patch of dirt so special? Is it just that it's big?
Well, size helps, but in the world of rare earths, quality and composition are everything. Round Top is described as the richest deposit in the United States for heavy rare earths.
Heavy.
And that distinction, heavy versus light, is absolutely critical for investors to understand.
Okay, let's break that down. I think most people hear rare earths and think it's all the same stuff. Why does the heavy part matter so much?
Think of it like this. Light rare earths, elements like lanthanum or cerium, are actually relatively common. They're used in glass polishing, catalytic converters, things like that. They're valuable, sure, but they aren't the bottleneck. Heavy rare earths, specifically elements like dysprosium and terbium, are the magic ingredients.
The secret sauce.
Exactly. If you're building a permanent magnet for a refrigerator door, you don't need heavy rare earths. But if you're building an electric motor for a car that needs to spin at 20,000 RPM, or a guidance system for a missile that generates intense heat, you have a physics problem.
What's the problem?
Standard magnets lose their magnetism when they get hot.
Which is obviously a bad thing if you're trying to drive a car or fly a jet.
Catastrophic. Adding dysprosium and terbium to the magnet alloy allows it to operate at very high temperatures without failing. It's non-negotiable for high-performance motors.
And right now, the supply for those is?
Incredibly tight and dominated by geopolitical rivals.
So Round Top isn't just a mine, it's a strategic asset because it has the specific flavor of rare earths that the high-tech industry is desperate for.
Precisely. It's about solving a national security and industrial vulnerability. The U.S. government knows this. The auto industry knows this. They are all looking for a source that isn't going to be cut off by a trade war or some geopolitical crisis.
And USA Rare Earth is positioning itself to be that answer.
That's the plan.
That's a compelling narrative. The story makes sense. But as we always say, a good story doesn't always make a good stock. We have to look at the numbers. And I have to be the bearer of bad news here. Looking at the 2025 filings, the revenue picture is minimal.
It is. We have to be realistic about where they are in their life cycle.
Hmm.
This is a pre-commercial production company. If you look at the Q3 2025 results or the full year outlook, you are not going to see massive revenue streams.
Right.
They aren't selling millions of magnets today.
And on the flip side, they're spending money. Building mines and processing plants isn't cheap.
No, it's incredibly capital intensive. Profit margins are negative. They're burning cash to build out this infrastructure. In fact, if you read the fine print in the filings, you'll see the standard auditor language about a going concern.
Let's pause on that phrase, going concern. It sounds scary. It sounds like the company's about to go bankrupt tomorrow. Can you clarify what that actually means in this context?
It's an accounting standard. It doesn't mean they're closing the doors tomorrow. It means that mathematically, if you look at their current cash balance and their current burn rate, the auditors can't guarantee they have enough cash to last 12 months without raising more money.
Okay, so it's common for companies at this stage.
It's extremely common for development stage mining and biotech companies. It's a flag that says we need to keep raising capital to survive until we sell products.
Okay, so it's a warning light, not a death sentence. But it does mean they need cash. And looking at the recent news, it seems they've been pretty successful at finding it.
They have. And this is the counterbalance to that going concern risk. They recently closed a $75 million private investment in public equity, what we call a PIPE deal.
$75 million isn't pocket change.
No, it's not. And usually these PIPE deals come from institutional investors or strategic partners who have done deep due diligence. They aren't just throwing money away, they see the long-term value.
And that cash is?
That cash is specifically earmarked to fund the magnet manufacturing capabilities.
And then there's the acquisition. This was the part of the research that really caught my eye. They spent $100 million in cash and stock to buy a company called Less Common Metals, or LCM.
This is the genius of their strategy, in my opinion.
But play devil's advocate for a second. If they're burning cash and they have this massive project in Texas to pay for, why go out and buy another company in the UK? Why not just put that $100 million into the ground at Round Top?
Because of the timeline. Building a mine from scratch is slow. We're talking about permitting, construction, pilot testing. The Round Top mine isn't expected to reach commercial production until late 2028.
3 years. In the stock market, that's an eternity.
It is. Investors get bored, they get anxious. It's the valley of death, as they call it in the industry.
So LCM solves that problem.
Exactly. LCM is an existing operating company in the UK. They are already producing rare earth metals and alloys. They have customers. They have revenue. By buying LCM, USA Rare Earth buys immediate operational capacity.
So they don't have to wait until 2028 to be a real company.
Correct. It provides them with scaled ex-China production right now. It allows them to go to a customer like Ford or GM today and say, hey, we can supply your alloys right now through our facility in the UK, and in 3 years, we'll switch you over to the US supply chain.
Wow. Okay, so it validates them as a serious player immediately, not just a science project in the desert.
That's it. It bridges the gap between the promise and the reality. It's a commercial foothold. And it creates operational efficiencies. They can learn from the LCM team, refine their processing, and prepare the market for the big ramp-up.
Okay, so we've got the strategy, which is solid. We've got the financials, which are messy but strategically funded. Let's talk about the stock itself. How is the market treating them?
Well, let's look at the price action based on the data from late 2025. The stock closed around $14.50 on December 24th, 2025.
$14.50. Is that a good entry? Are we at the top? Where does that sit historically?
It's a very interesting level. If you look at the technical indicators, specifically the RSI, the Relative Strength Index, it's telling a story of recovery. As of late November 2025, the 14-day RSI was rising from oversold levels.
For the listener who doesn't spend their day drawing lines on charts, translate rising from oversold.
Think of a rubber band. When a stock gets sold off aggressively, the rubber band stretches down, eventually gets too tight. Everyone who wanted to panic sell has already sold. The sellers are exhausted. When the RSI starts rising from that low point, usually below 30, it signals that the momentum is shifting. The buyers are stepping back in, It's often a signal of a bullish reversal.
So the technicals are suggesting the bleeding has stopped.
Exactly. And it's not just random retail buying. The AI trading tools that track institutional money flows are picking up on this. We're seeing dip-seeking strategies activating. These algorithms look for beaten-down sectors with strong fundamentals, and they're starting to accumulate shares here.
Okay, so the computers like it. What about the humans? What are the analysts putting out there for price targets?
The analyst outlook is actually quite aggressive. We're seeing a projected average price target for 2026 of $23, and the high target is sitting up at 28.
Let me do some quick math here. If we're at 1450 and the average target is 23, that's a significant chunk of upside.
It implies roughly a 60% upside from that 1450 level. And if it hits the high target of $28, you're looking at nearly doubling your money.
That's impressive. But obviously, those analysts are pricing in success. They're betting that the demand for EVs and defense tech is going to keep growing.
They're looking at the macro drivers. They see the government subsidies. They see the demand for non-Chinese magnets. And they see USA rare earth as the logical beneficiary.
But let's be the skeptics again. We talked about the upside. When do we actually see the payoff? You mentioned 2028 for the mine. If I buy this stock today, am I just sitting on dead money for 3 years?
That is the crucial question. This is not a trade for the impatient. However, it's not just a waiting game until 2028. There are catalysts on the calendar.
What should we be looking out for in the next, say, 6 months?
First up, earnings. We have the Q4 2025 or full year 2025 results expected in early 2026. Now, remember what I said? Don't look for profit.
Right. Ignore the bottom line.
Look for progress. The focus here will be on the integration of LCM. Are they realizing those efficiencies? And look at the capital expenditure, the CapEx. Are they spending the money on the right things to move the Texas project forward? We want to see milestones being hit.
Okay. And outside of spreadsheets?
Events are huge in this sector. Keep an eye on CES 2026, the Consumer Electronics Show, and the Magnetic Show Europe. These aren't just trade shows. They are where deals happen.
So an announcement could come out of one of those.
Absolutely. If USA Rare Earth showcases a new high-performance magnet or announces a partnership with a major tech firm, that can move the stock instantly.
And I assume Washington's a catalyst too.
Always. U.S. policy is a massive tailwind. Any announcement regarding new defense subsidies, critical mineral stockpiling, or grants for domestic processing is a direct catalyst for this stock.
Right.
We are seeing a sector rotation where capital is moving out of pure software and into hard tech and critical infrastructure.
Okay, so the path is clear, but the road is bumpy. What are the risks? What could go wrong here?
The biggest risk is execution. We can't gloss over that. Round Top is a massive construction project. Production isn't slated until late 2028.
That's a long time.
It is. That is 3 years of negative free cash flow. A lot can happen in 3 years. Delays in permitting, issues with construction, cost overruns. Mining is a notoriously difficult business to execute on time and on budget.
And commodities move, right? The price of the underlying metal isn't fixed.
Exactly. Market risk is real. If the global price of rare earths collapses, perhaps because China decides to flood the market to kill off competition, that changes the economics of the mine. They can't control the global price of dysprosium. If it crashes, their margins crash.
And there was a rumor in the notes about an index inclusion.
Yes, unconfirmed rumors about a potential inclusion in the Russell 2000.
That's the index for small cap companies.
Right. If that happens, it's a positive catalyst because it forces passive funds and ETFs to buy the stock. It creates automatic buying pressure. But again, it's a rumor. Treat it as speculation, not a guarantee.
So we have a clear picture. High stakes, high reward, long timeline. It's time for the verdict. Taking the acquisition, the mine, the cash burn, and the chart into account. How do you score USA Rare Earth?
When I weigh the mine-to-magnet strategy, specifically the brilliant move to acquire LCM and bridge that revenue gap, combined with the irreplaceable nature of the Round Top heavy rare earths, I am giving this a bullish score of 8 out of 10.
8 out of 10. That is a very strong conviction.
It is. But I have to qualify it. This is a multi-year hold. Yeah. This is not a stock you buy to flip next week. You are taking a position on the strategic future of the U.S. supply chain. You're targeting the 2028 production ramp.
So the thesis is buy it at $14.50, which looks like a solid entry point technically, and then wait for the domestic supply chain to mature.
Exactly. The combination of the immediate operational capability from LCM and the long-term asset in Texas creates a very strong setup. But you have to have the stomach for the volatility in between.
So what does this all mean for the listener? It means if you believe that the world is fragmenting and that the U.S. will pay a premium to control its own destiny when it comes to technology and defense, USA Rare Earth is one of the purest plays on that theme.
It is.
But you're buying a construction project as much as a company right now.
That's the bottom line.
Yes.
It's a bet on execution and a bet on the macro shift.
Fantastic. I think that gives everyone a lot to think about. That wraps up our deep dive into USA Rare Earth. Thanks for joining us on Smart Wealth with Joshua. Remember, this is about spotting value before the crowd does.
Keep an eye on those 2026 milestones. We'll see you next time.